Bitcoin crashes 5% in just a few moments, and investors and traders alike are wondering what's next for the future of this digital currency. Is the bull run over, or should we be buying the dip? Find out in today's exciting episode of the Live Crypto Trading Room. Ladies and gentlemen, welcome back to the Live Crypto Trading Room, brought to you by crackingcryptocurrency.com, where we crack the code on profitable crypto trading and investment. My name is Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. We've got to call it 5% of crash, Alex. Otherwise, people won't click on the video, man. People won't click on the video. Zoom out? Come on, man. I like it zoomed in. All right? My face. All right? All right, guys, we've got a great show for you guys today. In today's episode, we are going to be analyzing the 5% down movement and, of course, the bounce back up. We are also going to be reviewing the launches of two highly anticipated blockchains today. Tuna Chain, which I talked about a few weeks ago and got you into farming that airdrop, if you guys have been following, and Arthea, which has pretty much eliminated gas fees with a kind of unique way. So we're going to be covering all that in more in today's episode. As we get going, if you guys would like to support the stream, make sure to smash that like button like it owes you Ethereum from that pre-sale you bought back in 2019 and you got the distribution yet. That like button has your private keys, man. Just tap it. Give it a little what's up. Of course, if we do add 3 new members today, we will extend the stream by a half hour. All right. I don't like your yellow lights. All right, guys. Let's get rolling with today's episode. First thing, obviously, let's just start with Bitcoin. Let me pull up my notes here. All right. Okay, so before we get into the technical analysis, let's just talk about the fact that Bitcoin is experiencing what we in economics would call a demand shock. A demand shock is any situation where there is a sudden and drastic increase in the demand of something. All right. So Bitcoin is currently experiencing a demand shock because of the SEC approval of the Bitcoin ETFs. All right. This was obviously an anticipated event, but it certainly is unprecedented with its effect that it's had on the cryptocurrency markets, unlocking $14 trillion of potential assets or capital to flow into Bitcoin. Of course, not all 14 trillion is going to flow into there, but 2% of that's a big number. 2% of that is a big number. All right. Now, So far, the Bitcoin ETFs have been snapping up an average of about 4,500 Bitcoins per day. And guys, if you're not aware, we are only producing about 920 Bitcoins per day. All right. So there is a dramatic imbalance there between demand and potential supply. And because supply for Bitcoin cannot be adjusted, the only negotiation is the price. That is the only thing that can move is the price. And so far, we've been seeing very positive effects on the price that we've been experiencing. In addition to this, because the demand for Bitcoin is so high, ETF issuers who are required to purchase ETF to keep the net asset value of their portfolio correct are forced to go to the secondary markets. That's right. Bitcoin ETFs are buying not just from OTC desks, but also from exchanges because there's no other place to get it. We have seen the OTC desk holdings drop by 74% since 2020. All right. So we are draining OTC desks. Bitcoin balance on exchanges has also fallen 29% since 2020. Now, of course, there is some correlation there, not just between the Bitcoin ETFs. Obviously, 2020 was well before the Bitcoin ETFs were even a rumor, but it's just highlighting a trend of self-custody, and previously the Grayscale Trust, and now ETFs. All right. So that is certainly accelerating. Now, at the current pace of demand, it would take another 500 and some days to drain all the Bitcoin balances on exchanges if this demand were to keep up, and we're just going to drain the balance on exchanges. So plenty of time for this rally to continue, ladies and gentlemen. Plenty of time. But that certainly is the primary catalyst for Bitcoin's price right now. And I think analyzing these ETF flows, and by the way, I get all this ETF data from the same place everybody else gets their ETF data. 1 second here. Where did it go? Here it is. Yeah, I get my ETF data from the same place everybody else gets their ETF data, who is making content in the cryptocurrency markets, and it's from this gentleman right here. James Butterfill over on Medium. So a big shout out to James Butterfill. Fantastically well-written pieces. But he has been doing these beautiful reports on the ETF flows. So again, everybody out there sounding like they have unique data on the ETF flows. 99% of crypto traders out there do not have access to a Bloomberg terminal. They're all getting it from James Butterfield. All right. So spoiler alert. Okay. Next. All right. Now, it is interesting to note retail traders are returning to cryptocurrency. All right. We've been talking about this for a while, but normie metrics are beginning to tick up. Things like Google search trends, things like crypto app downloads in the Play Store and the App Store. All those things are starting to trend up and go parabolic, actually. So these are all the signs. You know, we always see web traffic spike for cryptocurrencies when prices are high. This is a tale as old as time. Now, you know, just as before we get into everything, if you guys have been following us for a while, I'm sure your portfolios are stacked and you've already seen some impressive returns. I know the people, I know the members in the premium trading group have certainly, and certainly so have I. For those of you who are a little late to the party, all right, so for any potential normies who are trickling in, finding the stream, interested about what we're doing, interested about getting into cryptocurrency, there are still plenty of gains left on the table. But my word of caution here is, you know, it's very alluring. It's very attractive. It's so seductive to use leverage to maximize gains. And often when people come in, they're starting with small capital and they want to rapidly grow that. Focus on building up your spot portfolios. Focus on getting good at spot trading first. Focusing on the long side because the market is very forgiving in bull markets. So just focus on long side trade opportunities. Don't worry about shorting. Just disable the red button for the next 18 months and you'll be good. I don't care how many 20% drops we get or 30% drops we get or fucking 50% drops. I don't care. Don't short. All right. You will lose money trying to short in a bull market, regardless of how fast and how sharp and how sudden the drops are, regardless of how much money you see other people make from shorting. My advice to you, as somebody who has seen multiple cycles and done well, is you can only focus on a few things at the same time. All right. You can only have a few components in your strategy. And if you focus on your strategy and just stay in your lane and do your thing, you can do well and come out of this with some good money. All right. Maybe not life-changing money, right? But that's up to you, right? That depends on how much money you invest in, how much time you want to put in, how much grind you want to put in. All right. It's the world is your oyster. This trading world is your oyster. But you got to be careful with leverage, guys. You got to be careful with leverage because these drops can wipe out leverage positions. These wicks do not care about you. All right. So be safe, stay safe, trade safe, guys. All right. All right. So that's about it. Let's get into the Bitcoin technical analysis. We're going to skip the weekly because we don't have a new weekly closure, and we'll just keep it on the daily for right now. On the daily time frame, Bitcoin just pulled back to the 9 EMA. All right. So nothing scary, nothing crazy. All right. Hanging man doji. Now that's the candle structure that we have right now. This is called a hanging man doji. A hanging man doji is characterized by being a doji. So a doji has a small body, all right, a small distance from the open to the close. A small wick to the upside characterizes a hanging man doji, and then a long wick to the downside. It kind of looks like an inverted hammer candle is what it looks like. And it kind of means the exact same thing as a hammer candle. When we see a hammer candle come in after, you know, when the market's been trending down, that's a reversal candle. We kind of look for prices to move up after a hammer candle. A hanging man candle, very similarly, bearish. So we would kind of be looking for prices to move down. Now, again, just one candle is not going to invalidate everything that's been going on, but that is the structure of today's candle. It is a bearish reversal candle. All right. Daily TSI. We got to really zoom in here, but we are bullish. All right. We have not crossed back underneath. All right. It's very close, but we have not crossed back underneath. We talked about how yesterday actually triggered a swing long. RSI has crossed back underneath though, unfortunately. So kind of regardless, if today's daily candle does close like it is, we'll probably be getting this daily swing will be getting probably kicked out of its position. All right. So it is what it is. Sometimes, listen, guys, the trending strategies beautifully catch big movements after we've seen volatility come down. But when we're going for continuation trades and we're not waiting for a volatility reset, we can get chopped up. All right. It just is what it is, right? You have to kind of ask yourself, you know, what type of strategy do you want? Do you want to trade the, do you want to, you know, allow yourself to get chopped up? Because knowing that eventually you'll get that one trade that makes up for the small losses, or do you just want to focus on your high quality trades where everything is perfect? What that often means is that you will miss out on a lot of trades, potential trades, but you will also, of course, miss out on a lot of small losses because you'll miss out on chop. So again, just something that you need to do, something that you need to be aware of in your own strategy and your own testing. I'm not going to get super concerned about a pullback until we close down below the 9 EMA. 9 EMA is currently sitting around 68,250. So unless we get any daily closures below there, I'm really not too worried. I did buy this dip on this little pullback. You guys can see proof of trade right here. Yeah, so I entered, this is the trade from yesterday, and I entered again at 68,988.50. Just, grabbed up a little $1,000 trade right there. You guys can see that. Actually a little higher than my entry from a few days ago. This is the Bitcoin 4-hour swing long. All right, so I did buy the dip on a trading style here. All right, so not too much here to talk about on the daily. Obviously, we had red line volatility. Volatility is coming down and looking to reset. RSI is still overbought, signaling strength. And we do have some regular bearish divergence that has not yet played out. So we do have regular bearish divergence on the daily time frame. We do have regular bearish divergence on the daily time frame. And of course, RSI just crossed underneath. So, action on this. I'm probably not going to be recommending any long entries again. Of course, we can get really greedy. If price breaks up, if we get a nice bullish candle again, you guys know me, I'm kind of a mega bull right now. So kind of any and all opportunities, I'm grabbing up longs, and it just is what it is. That's going to work out for me real well. And then I'll take a loss when the market turns, and it is what it is. And then we'll pull in, then prices will pull back and we'll enter long again. Right. And that's going to be how the bull market goes. All right. Some wins, some losses, all good. 4-hour time frame. Let's actually see here. 4-hour time frame. What happened here? So we had strong wick down. Prices basically, come all the way back to the top of that wick right there. 4-hour RSI crossed under, and TSI is basically resetting here. What's up with TSI? We got to reset. All right, yeah, and TSI is kind of curling back down, but the RSI did kick us out of the trade. So what we're going to do is, where's the 4-hour swing long? 68.9. Yeah, sorry, this is the 4-hour swing long. So we're going to go ahead and take profit on that 4-hour swing long because we did get the exit signal. All right, as you guys can see, RSI closed underneath on the previous candle. And we decided to hold, and that's okay. So life's good. What is very nice now that I'm seeing is that we have this nice 4-hour volatility reset. All right, so we can pretty much safely take the next trending signal. All right, on the 4-hour time frame. We're bullish, obviously, on the 4-hour time frame above the 55 EMA. Okay, so that's sitting at 67,768. So no shorts on the 4-hour time frame until we're below 67,768. All right, so only longs. So on the 4-hour time, so on the daily time frame, on the daily time frame, we have two possibilities, right? We have pullbacks to the 21 and the 55. We'll be longing those dips. Okay. We have, if RSI crosses back above the signal line, we could also go for a reentry as well. So those are the two signals we're waiting for on the daily time frame. On the 4-hour time frame, same thing. We are waiting for RSI to cross back above the signal line to give us another entry, or we are looking to buy pullbacks to the 21 and the 55. And we already bought the 21 pullback. And because we are so overheated, I think I'm just going to chill for right now and not look to add a ton of new positions, I think is the way that we're going to be playing this. So let's go down to the hourly, see what the hourly is suggesting. Same thing here on the hourly, bullish above the 55. And we had this nice, beautiful pullback almost to the hourly 200 EMA. But nice pullback here to the 55 EMA. I mean, this is where price is hovering around. Price is now coming back up, and we are retesting our fast EMA cluster on the hourly time frame. So we either see rejection from here, or price does get back above this EMA cluster. So I think very bullish if we can get back above 71,615. So if we can get back above 71,615, we'll have regained the bullish hourly momentum. That'll kind of be our first sign that things are doing good. On the hourly time frame, looking for a trade, we kind of need everything at this point in time. We need TSI to cross back above the signal line, and that's the first thing that we need. We can't do anything until TSI is bullish, all right? Can't do anything until TSI is bullish. So right now, I think we're mostly in a holding pattern. Again, I did buy the dip. I'll probably just hold that. I'll probably just hold that hourly because that was discretionary and not related to the strategy. I just wanted to buy the dip. I felt it was the correct thing to do. So that's all we'll do there. That's all we'll do there. All right, let's get into Ethereum. Okay, so yeah, so in summary, weekly swing positions are open. Daily swing positions are closed. Looking for a re-entry signal from RSI. 4-hour swing long positions are closed, waiting for a re-entry signal from RSI, which I'm eagerly awaiting because 4-hour volatility has gotten really low. So we're just going to go ahead and actually set that alert. Thank you. We want... Okay, so I'm going to go ahead and set that 4-hour alert. We can go ahead and delete these. All right, so let's get over to Ethereum. Ethereum weekly swing long positions are still held open. Ethereum daily positions are going to be closed at today's daily close. All right, RSI has crossed underneath the signal line, giving us that exit signal. So we do want to be closing out daily swing long positions. Right now we're just waiting for an RSI resignal at this point in time. Do we have any? I'm sorry. Do we have any? Yeah, we do have. No, we don't really have any bearish divergence on Ethereum on the daily time frame. Ethereum on the 4-hour time frame, again, just giving you this beautiful pullback to the 55 EMA, just beautiful pullback buy. Again, just beautiful trade on the daily. 4-hour swing long positions do need to be closed at this point in time. TSI has gone bearish on the 4 hours, so now we're just basically, but again, same here. Ethereum 4-hour volatility has gotten quite low, not a full crush, but at this point in time, we'd be basically taking any bull swing on a TSI bull cross at this point in time. And Ethereum on the hourly, again, beautiful pullback to the 200. So just look at that. Look at that. Pullbacks to the 200. What do? You buy them, right? You buy them. They're beautiful. All right. So I think it's just good in general, right? Good dip buying opportunity for both Bitcoin and Ethereum. All right. Let's look at Bitcoin dominance right now. So Bitcoin dominance has certainly come down this last week and is kind of chilling. So overall, I think we're postured well for altcoins to continue doing okay. Obviously, Bitcoin dominance, being at 54% is overall not great. We would like to see this come down. We would like to see this slightly bearish trend, but Bitcoin dominance is not really able to break out of this range so far. We haven't seen this big switch or surge in interest. Bitcoin dominance is though quite high at this point in time. USTD dominance. All right, USDT dominance continues to move down, confirming the bullish market. We don't want to get super concerned about USDT dominance till we cross back above the 21 exponential moving average. That tends to be a very early heralding signal of prices moving down. This is an inverse correlation, USDT dominance. We do see some regular bullish divergence, though, on USDT dominance. Not going to lie. So regular bullish divergence on USDT dominance, potentially an early hinting at an early sign of a reversal. USDT. S. Sibilance. Okay, let's get into today's topic piece, ladies and gentlemen. Today we're going to be going, I don't know what in God's name is going on here. All wrong. There we go. So that was just all wrong. And that is not the... this is weird. Okay, hold on a second, guys. Okay. Awkward, but we'll take it. That was a lot. All right, good stuff. Good stuff. Good stuff. Okay, I want to talk about a new blockchain today. Here we go. The blockchain we're going to be talking about today is going to be Arthera. All right. Boom. All right. So Arthera came across my radar over this past week, and I decided to cover it today. So essentially, Arthera is a new layer 1 blockchain. All right. It is EVM compatible, so it's Ethereum virtual machine compatible. So it is going to be compatible with Ethereum and other EVM compatible chains. And what's really unique about Arthera is that they have this unique native subscription service, which effectively eliminates gas fees. Okay. No, of course I forgot to hit the record button. Yes, to crypto. I'm just terrible at this. So they have this very unique subscription service, all right, which I think is very cool. And obviously it's a very scalable blockchain as well. And, you know, kind of a shout back to Dash, which, you know, I quite like, or kind of the early days of 2017, 2018. I remember these being quite popular. But for the first time in a while that I've seen a viable protocol use a DAG, all right, a directed acyclic graph. And so it's a DAG-based proof of stake consensus model, all right? And you know, again, we've got pretty ambitious goals from the developers and pretty decent traction so far. So we've already had more than 500,000 transactions. Actually, it says here 3.32 million transactions, and 71,600 wallets have already signed up. And this has only been live for about 3 weeks. All right. So I do really like, as I said, the subscription model. I think it could be a window into the future of Web3, what that would look like. With account abstraction, obviously being a very powerful narrative. And so you guys can check this out for free and use Arthera Chain and get a 3-month trial subscription for free. And I'm going to show you how to do that. So this is, I'll put the links in the description when I'm done with the video. But this is arthera.net, ARTHERA.net. The first thing we want to do is we want to go to their wallet page. This is just wallet.arthera.net. You will come here. You will select your wallet. It will add the network for you. And boom, bam. And you will come to this page once you sign in with your wallet. And you will see that you do not have a subscription. As you can see, I have an active subscription. They will give you this Arthera trial subscription. 30 daily transactions for 3 months, which is quite nice. All right. So once you've set up your wallet and you've put Arthera Chain into your MetaMask or your Rabby or your Phantom wallet, whatever you're using for a wallet, then you want to go grab your free subscription NFT. To do that, you will go over to the faucet, which is just faucet.arthera.net. There we go. And this is the page. You will just put in your wallet address, which will be your MetaMask address. It would be the same as your Ethereum address. You just put this in here and click request subscription, and you will automatically get the 3-month trial subscription. One other fun thing that you guys can do while you're here, you can mint a commemorative NFT of Arthera's white paper. So again, once you're connected with your wallet, as you guys can see, I'm up here, krakencrypto.f. You'll just come to this page. This is whitepaper.arthera.net, and you will just hit this mint button, and you will mint your NFT, which if we go back to the wallet, you guys can see that I have in my wallet, right? I have the NFT in my wallet. All right. So that's about it, guys. That's about it. And then they've got a big, from their main website, here we go. You can go to products and you can go to the DApp store, and you can come down here and you can check out these free gas apps. You can use these apps for no gas. So you got an opportunity to use Gelato, Elk Finance, Just Money, Kadena, Mintup, Orally, Net Future, Symbiosis. I was messing with Kadena a little bit earlier. This looks really cool. So this is basically a trading terminal where you can connect to centralized exchanges and decentralized exchanges. So from this terminal, you can do your DEX trading and your centralized exchange trading too, right? Which I thought was really cool. So you can connect your wallet, and then you can add your API keys in here to connect to your centralized exchange. And yeah, I mean, these guys got a wallet analyzer in here. All right, these guys got a big trade analyzer, right? So we can just look. We want to watch for big trades on Avalanche to the buy side over 50K. All right, so we can see here that when was this? Yeah, so 4 days ago, somebody bought 516 well, that's a lot. Oh, okay, never mind. That doesn't matter. $550,000 bought of Kimbo on March 9th. All right, so you can use these tools to find decent things to trade, which is pretty cool. New pairs overall. So I haven't played around with this too much. I just learned about this today. But yeah, I mean, you can pretty much trade any pair, right? You can look for things by TVL. So very cool little, centralized exchange, decentralized exchange dashboard. Let me know in the chat if any of you guys have any experience with Kadena, and if you like it, because I'm kind of interested in it. But yeah, you've got a wide range of apps that you can kind of play around with, and that you can kind of interact with for free, because Arthera is basically footing the bill. Where did the DApp store go? Oh, I see. Yeah, so again, just products in the DApp store. And yeah, Elk Finance, also very cool. Gelato, also very cool. So yeah, feel free to play around with some of these dApps on Arthera's dime. So no Kadena, but we like Kadena. All right, that's it for Arthera.net. I will leave the links in the description, and let me know in the comments section your guys' experience or your guys' expectations for Arthera Chain. Could it do quite well? Quite good. And I'll also tell you guys that getting in like this and doing their trial subscription, again, not confirmed, but certainly is your foot in the door to qualify for any potential future airdrops or any distributions in the future. All right, let's move on to something I'm kind of excited about. And this is Tuna Chain. All right, Tuna Chain. If you guys will recall, I spoke about Tuna Chain several weeks ago, and I made, so a few weeks ago, I talked about airdrops that you guys can get into for absolutely free, no cost airdrops. Tuna Chain was one of those, right? So I had you guys go get the Unisat wallet, all right, and get some testnet Bitcoin and engage with the TunaNet testnet, and qualify for the airdrop that way. So I hope you guys did that. If you missed that, just go check. It's a couple weeks ago, the live crypto trading room episode definitely has something in there. Are all the papers on your wall in the background like Russell? No. Yeah, the title of the video is something like, 5 airdrops you can get into for free or something like that. Go check that video out. If I'll find the link and I'll put it in the description down below if you guys didn't take advantage of that free airdrop opportunity. But today, Tuna Chain just launched their LBP. For those of you who are not aware, LBP is an alternative to a pre-sale whitelist. It's an alternative to a pre-sale ICO, IDO. And I think it's probably one of the fairest ways to do it. LBP stands for liquidity bootstrapping. And what it is it's basically a Dutch auction where the developers put the amount of tokens that they basically want to release throughout the token generation event into a pool. And then the bidding starts off at a high price and the bidding or the price drops, right, as time goes on. Okay. So right now, again, to buy one Tuna Chain token, it's about 60 cents. But if you wait, potentially it'll be 6 cents. All right. So again, this is just kind of how LBPs work. It's a very fair way to distribute a token because it cuts down on a lot of sniper bots, front runs, all kinds of things. So not bad. Yeah. And again, just in case we kind of glossed over this, quick rundown of what Tuna Chain is. Tuna Chain is the first EVM compatible modular blockchain built on Bitcoin. Right? It is a competitor to things like the Lightning Network. It is a competitor to stacks. And as many of you guys know, Stacks has been one of my Stacks has been one of my favorite investments. Not the most profitable investment I've made, but Stacks has consistently performed for me over the last few years since I bought into their ICO. And I'm still holding all those funds. I'm still staking all those tokens, earning nice rewards, getting paid out in Bitcoin. So it's pretty nice. But yeah, and I'm a big believer in building on Bitcoin. And I think, I think this could do well. So Tuna Chain is going to have a native stablecoin. They're going to have their modular data availability layer. And for the TX layer, they're going to be using a hybrid zero knowledge and optimistic rollup approach. So this is a rollup approach, very similar to Optimism, built on top of Bitcoin. So very cool. The way that Bitcoin is structured, they can't use some of the most tangible elements of zero knowledge itself, just because of the way Bitcoin is structured. And Bitcoin, because of the way it's structured, cannot have a true settlement layer like Ethereum does. It just won't work. It's not built the same way. So what they're doing is they're basically simulating a settlement layer. All right. Okay. All right. So yeah, guys, I will leave the link to this. I'll put it in the chat. I'm going to put a chat. I'm going to put a link. I'm going to put all these links in the chat right now. And then I will also put them in the description of the video when we are done. All right, so first one up is the link to the LBP. Okay. For Tuna Chain. So that's how you guys can get Tuna Chain today if you want to get Tuna Chain. And then the next links I'm going to drop are going to be the Arthera wallet link. So you guys can go set up your Arthera wallet. And then the Arthera faucet, so you guys can go get your free trial subscription. And the Arthera white paper, if you guys want to mint your commemorative white paper NFT. All right, so life's good. All right, so we were able to cover there the Tuna Chain LBP and the Arthera trial subscription. I think we're good. All right. Excuse me. All right, we've been live for about 34 minutes. We're going to go for about another 30 minutes. And now is the time where we will take your questions. We will happily talk about anything that you guys want to talk about. I will be taking chart requests right now. And while that is going on, we are going to be going through and looking for potential trades as well on the daily time frame. Hmm. All right, cool. So hold on. Let me go through the chat. I was just looking at this. What's going on, guys? By the way, shout outs. We got everybody in the chat. Eth1, Alexander Pearson, my YouTube journey. Southside, Crypto Plays, Playa, Black Beauty Machine, Loper. We got B Flow. What about wife changing money? Yeah, that's this dude. Wiser than most. Yeah, gas is absolutely insane. We got Zabak. We got Gary Wall in here. Got the world above. I got a request for Shib. Wow, that's a lot of requests. Shib, MCRTS, TMX, Theta, BTT. All right, you guys toss these all in at the beginning. BitFi. All right, so I'm gonna open up requests now. So I'm going to ignore the requests that came in at the very beginning. If you guys put them in now, I'll take them. So charts you want me to look at now, I'll look at. So I've got Reef, Sui. I got Reef and Sui right now. I'm going to start off with fails. Yeah. So let's talk about Ali's question. Hey, Prophet Bear, good to see you, man. So yeah, let's talk about. Please, Ali asks, can you please talk about potential option positions that we can take on Thales and the ones you would suggest? Yes, to crypto with the 10, man. Coming in hot. Let's look at Kadena and COQ. Absolutely, man. Absolutely. I do accept bribes. Yes. Yes. All right. So let's look at Ali's, and then we'll do Kadena, COQ, Reef, Sui, and yep. And then we'll look at Myro and Metaplex for Alex. I haven't looked at Metaplex in a minute. Kind of forgot about Metaplex, I'm not going to lie. Need to put that in my... I don't think Metaplex is in my crypto map. Yeah, I know. Okay. First, options positions on Thales. Well, first off, before we look at Thales, let's look at the industry standard and see what options look like on Deribit. All right. And we can kind of get an idea, by the way, by just looking at the BVIV, the Bitcoin Volatility Index. And yeah, Bitcoin volatility is pretty much as high as it's ever been. All right. It has been, of course, higher back in 2022 since this metric began being tracked. But yeah, volatility is very high. That means downside protection is going to be extremely expensive. All right. There it is. Yes, Crypto. Thank you so much for the $10 super chat, my brother. All right, so since we know volatility is high, we know that options are going to be expensive. And so let's just give this a quick refresh. And if anyone chills me a Solana coin, testing out my Solana Telegram bot. Metaplex, probably. Good hold on. Okay, so looking at options, with an expiration of the 29th of March, we see that implied volatility is about 75.6. So the market is pricing in a 12,000 move to the upside or a $10,000 move to the downside by March 29th. All right, meaning that it is looking for price to be around 60,000 by the end of March or 82,000 by the end of March. All right, that's what the options market is pricing in. So if we were to buy at the money puts, so we could either buy $72,000 puts or we could buy $71,000 puts. And they are all extremely expensive. So to control one Bitcoin worth of puts at the current strike price of $72,000 is going to set you back $43.12. If you guys will recall, when I began talking about these were at 55. And yeah, so $55,000 strikes are about $326. So the market is not pricing in. So we can just look at these and we can see that the market is pricing in a pretty strong probability that the market will move down to 62,000. That's why, and we can see that, out of the money puts down at 62,000 are still 1,015. Sorry, I know you guys probably can't see this very well. There we go. Yeah, so we can just see based on this that $62,000 strikes out of the money puts are currently going for about $979. 61,000 strikes are currently going for about $834. So again, would I buy those? Absolutely not. It doesn't matter that it's cheap. If I've learned one thing trading Bitcoin options is that you always buy at the money. It doesn't matter, right? You pay for the right to make money. All right. I don't know how to calculate that right off the top of my head, as in what is the max pain. I believe we would have to do something like, first off, we would have to figure out where everyone is positioned, because you want max pain is when options expire worthless. So we would be looking for where would price have to be? Where would price have to be for the most amount of options to expire worthless? So let me just, I don't think I can get the data from Glassnode, but I'm going to give it a college try. Yeah, I'm not able to see that data. Yeah, I mean, yeah, Deribit as the position builder, but with the information that we want, well, to be honest, I don't think there's a good way to go scrape the information that we want. I think we'd have to log it, because you basically would have to, and I do follow this one guy that does this, but I haven't read his stuff for actually a while. But basically, you need to basically just be logging all the significant trades, which you'd see if you were reading the tape, right? Or if you were connected to the options flow. So yeah, if we come down here to options, we should be able to see. Yeah, here we go. Options trades. All right. And then we just filter this for a minimum size of, I don't know, 10. Okay. Filter for, yeah. There we go. So yeah, we basically just do something like this where we would be noting down what was bought. All right. So we can see here that $76,000, you know, people are getting pretty reckless here, buying $76,000 calls, $78,000 calls, and quite a lot of them too. Somebody here bought 50 $76,000 calls, average price of $572. So that's a nice chunk. About 30 grand right there, 30 grand in calls. So we would want to be looking for the most significantly. Yeah, like here's $80,000 call. So somebody just spent, $20,000 saying that price will be above. That's so stupid. There's no way price is going to be above 80,000 on the 20. This guy is saying this guy spent $20,000 to bet that price would be above $80,000 in 10 days. 10 days. This dude's looking for a 10-day movement up to 80,000. Oh, and then he bought 100 3-day expirations, and he only bought 8. I don't know, it's the same guy. 8 for March 22nd, but this is March 15th. That's 3 days away. $80,000 call. That's something. I'll tell you what. So basically this would be the process, right? You would just be basically downloading all this data, and then you would just be, adding it up. Add component. No, but I don't think we want this because we don't have any positions. Yeah, what do we want here? Greek summary, open orders, options pricer, options trades. We have that though. Yeah. Anybody knows a good way to get that data? Yeah, I don't think so. Drown your sorrows in a gyro. Oh man, that does sound good. My wife had a gyro the other day, and I was watching her eat it, and it looked so delicious. So delicious. Yeah, 80K before 10 days. Let's do it. Yeah, he might be arbitraging. He might be hedging his bets with a big because he might be taking most of his risk on puts, and then he just bought that to hedge. So completely valid. So all right, so so from here we can ascertain that a fair price is 42.43. So now if we go over to tails, whatever, Thales. We're going to go to markets and Bitcoin, and we're going to go March 29th, and we think price is going to be down, and we want to buy the $72,000 strike. And the max buy is $6,788. And if price is below 72,000 on March 29th, you would win $11,500. So a little under a 2x. Not a bad way to trade. Of course, if you're wrong, you lose all your money. That's how it works. Okay. So that's probably, that right there is probably And what are we getting them at? 55 cents on the dollar. How much it costs to buy those? Yeah, I mean, if I was going to get downside protection, that would be the way. Okay. Current potential return of investment if the position is winning on the chosen maturity day. So you have it. Yeah. So get a potential 81% ROI for that position. You know, but honestly, this 70,000 strike price is looking pretty good too. You get an additional 29% ROI, and you're able to get them for cheap, relatively cheaper. These are about 10% cheaper than these. Actually, about almost 20% cheaper, but yeah. 5126 would cap the winnings at $9,000, but you're risking less. So overall, not bad. Yeah, I would be eyeing the $70,000 strike most likely. I wouldn't go any lower than that. I don't care how big these bonuses are. You don't want to buy dramatically out of the money puts. I mean, almost always I would just recommend buying at the money strikes right now. This is technically in the money. This would be an in the money strike. But you know, we could go a little out of the money here at 70K. I think that's real valid. Because I mean, if you're expecting a pretty big move, if you're expecting a bit of like a 20 or 30% correction to occur in March, and that this is kind of an early warning sign and not just another dip, which, you know, we bought up, then yeah, that'd probably be the strike price. Yeah, and as Alex says, the very nice thing about tails is that you can cash out early. So as long as he says here, as long as the price doesn't move much against you, in case you're just looking for a hedge, all right? So you know, you can. The nice thing about this is that you can always buy, and the same with an option, right? Like you can go on Deribit and you can buy the options contract, and then you know you can wait a few days and just sell it if price isn't going your way. I will say that the closer you buy, like the closer the expiration date is, the more volatility will affect the value of your option. So, for example, if you were buying September expirations right now, and then if price moves up or down 5%, it's not going to have that dramatic of an impact on the value of your option if you wanted to sell it back into the market. But if you're buying end of March expirations, right, like 2-week DTs, or you know 2-week TEs, then a 5% move is going to be pretty dramatic, right? So yeah, that's what I'd be looking at. And then of course, yeah, there are alternatives to tails. There's Lyra. Alex was saying that the Lyra token actually looked good, so it's always good to buy something where the token looks good. Do I have a link for tails? Yeah, it's just tailsmarkets.io. I'll put it in the chat. I recommend using it. I have to ask Alex. Alex81SG. Are we doing Arbitrum or Optimism tails right now? Because I think Arbitrum is it's Arbitrum incentivized right now, isn't it? So we want to be doing Arbitrum to get the extra Arbor rewards, or is it OP? I can't remember. But you want to use one of the chains because one of the chains right now is having an incentive program where we're getting paid out in. You'll get paid in Optimism or ARB tokens just for taking trades, for utilizing the protocol. I can't remember. Arbitrum, yeah. Yeah, still has incentives until April 4th. Yeah. So I'd be doing it on Arbitrum. I bet that it's going to impact liquidity too. Yeah, so now on Arbitrum, oh, we can get them much cheaper on Arbitrum. But actually, no, I'm sorry. There actually is significantly more liquidity on Optimism. So yeah, look here. So this now at 70,000, we're getting 157% ROI for significantly less, 0.389, but our max buy is only 29.62. Okay. So 29.62 will still pay out 6,792. So that's a good trade. So I would probably grab these on Arbitrum and then potentially even go grab those. I would potentially even come grab these 70,000 strikes too. Oh, price just went down actually. So no, it didn't. It's not that it, okay. So things just changed. Things just repriced. So yeah, so these are actually looking very, very attractive now. These $70,000 strikes, and you can go up to 35.50. So liquidity is getting drained as we speak. So I would hustle if you wanted to get these. I mean, obviously don't like hustle and make a bad trade, but same. We saw that how dramatically that number just went down. Yeah. Yeah. So 5% kickback on out of the money options and 2% for discounted options. No incentives for in the money options though. So yeah, so you'd want to buy $70,000 strikes. Out of the money strikes. If you buy anything above this yellow line is in the money, meaning that if you buy this strike, you're immediately in profit. But you're going to, pay out the ass for it. That's why they're so expensive. But anything under the yellow line is considered out of the money because it is not profitable yet. You are buying something that is unprofitable with the expectation that the market will move in your favor and make you profitable. Okay. So much more to go through. Let's get back to Yes to Crypto with a $10 super chat, my brother, coming in with the Kadena and COQ requests. So we can switch over to the main scene to look at Kadena. KDA USDT on Binance. First things first, let's just get a lay of the land. See what we're thinking here. Okay. So pretty impressive falling wedge. The price traded in and broke. So two ways we can measure this. We can either measure from this high, which is fine to get our target. Anytime price breaks out of a falling wedge, it often wants to go to the 382618 retracement, or so Evan has taught me. But the other thing we could do is we could be kind of moonish and we could measure up here. And what that will allow us to do is just be kind of greedier. And that would shift our take profit area to this. Okay. Either way, I think the breakout of the falling wedge has happened. Okay. We've hit that profit target on the fall out of the breaking wedge. So that's kind of done. That's kind of looking into the past. All right. And I'm just going to leave this one for now since, we've kind of overcome it. Life's good. What do we have now? Well, we do have a nice supporting trend line, and potentially we are forming a resistance trend line as well. So channel trading is beautiful. Channel trading we really like. Channel trading is good. Predictability is good. All right, so now let's look at our momentum oscillators. So first off, actually, just price action trading. What we would expect price to do at this point in time after putting a tap on the ascending trend line to the top and potentially forming this diagonal trend line. We would expect prices to come down and retest the bottom of the channel before going for another move to the upside. See here, yeah, we have nice double bottom, breakout, big wicks, big liquidity coming in. So potentially looking at a 15 to 16% movement down in Kadena to retest the bottom of the supportive trend line, and then look for that push back up, which would be about a 60% move back up to the top of the trend line. So that's looking pretty good. All right, now bring on the indicators and see how our strategy would have played this. Why do we have, okay, yeah, that makes sense. All right, life's good. So yeah, we're bullish here. TSI is bearish for this move. Let's see here. Yeah, we do go long here. And are we punished? No, we're not punished, just barely. Here, out, and then re-entry on the breakout. And then RSI has us in the trade until 2 days ago, where we close out. We are still in a bullish trend, but the strategy is suggesting to be out of this particular trade. We did just get a pullback to the 21 exponential moving average. So if you're very aggressive, that was a dip that could have been bought. If you're being a little bit more conservative, looking for pullbacks down here to the 55 exponential moving average, and probably wicking down to the bottom of the channel at that point in time. So I'd be looking to buy Kadena back around $1.28 to $1.15 is where I'd be looking to repurchase Kadena at this point in time. And of course, you know, volatility is resetting here, so we could take a continuation signal if RSI were to cross back above the signal line, but that would be a higher risk. That would be higher risk on Kadena. So overall, I think Kadena looks good. We are obviously in a nice bullish trend above all major moving averages. I think we are a little overheated right now. I think price will probably come back, reset before going for another leg up. Higher risk if we do continue on immediately, though, of course. I would be looking for a close above $1.75 for something like a breakout trade at this point in time. And then just looking for that RSI initiation crossing above the signal line is what I'd be looking for there. That's Kadena for you, sir. And then COQ, I believe, was your other request. Yeah. I have it here on AVAX. The only thing I'm watching on Avalanche. No, stun gun. I don't think there's a chance. Okay. All right. So my opinion on COQ really isn't any different than it was. I mean, listen, that's not necessarily true, actually. Stun gun, let me take that back a little bit. Like, yeah, like off the top of my head, hot take, like, no, of course not. You know, it's trash. But the thing is, I mean, look at Bitcoin Cash, man. Like, people are still pumping that, and everybody knows that's just straight up useless, and even Bitcoin SV, right? Yes to crypto with the 5 gifties, man. Oh, I was just sitting here thinking about how delicious my lunch was going to be, and now I'm going to stream for next draft. Oh, thank you, man. Thank you, thank you, thank you, thank you, thank you. You're the best. Appreciate you, my brother. We get some thank yous in the chat for Mr. Yes to Crypto, carrying us past the member goal of 45. Absolutely just picking the chat up on his back, right? Unracking the bar and just going for it. Just going for it, man. Thank you, brother. Much, much, much appreciated, man. So much appreciated. All right, COQ, man. Listen, honestly, my opinion on this is not too different than it was just a few days ago. Because obviously price has pretty much gone parabolic here in this last area of the phase, going up another 60%. And then we've been unable to make any forward progress since then. All right. So right now we're just kind of locked in a range. And I talked about declining volume being bearish. And now we have massive volume coming in on this hanging man candle, this exact same candle that we're printing on the daily for Bitcoin, usually a bearish reversal candle. All right. So again, we can see price charging up back up to the all-time high. and then running into some steep resistance. So overall, I think this is fine. My opinion on here is still the same. I would be trimming profits in this consolidation area. We're taking profits on the way up. Things don't go up forever. But we could still continue to hold the position because we were forming this descending trend line. Okay, let's actually make this a little smaller. We were forming this descending trend line, which we have now broken above and even back tested previous resistance as support. All right, so life's good. We have also now reclaimed being broken out above the broadening ascending wedge, or the bullish megaphone, as we like to call it. So this is good. All right, overall, this is good. Bullish prices are always good on COQ. The measured move target we're still targeting is obviously up here at 507986. Did you guys know that too, by the way? Were you ever confused by this when you look at a ticker like this, and it looks like 0.0s? It's not an S, it's a 5, and that tells you how many zeros are there. So it's 0.507986. Public service announcement if you guys didn't know that. So still targeting that measured move, all right, of the breakout, and that is, again, as I said, 7986 preceded by 5 zeros would be the measured move target. So that would be another 27% above us. All right. Obviously, if we break back down into the bullish megaphone, we would, of course, be looking for a 40% pullback all the way down to the pullback target of about 48.26. Actually, down to 48.26 is only about 23%. That's the current pullback target that we have right now. We've already hit that. We've already hit that. So life's good. So probably moving that down here at this point in time, something like this. Let's see here. Let's see. Yeah. That's my story, and I'm sticking to it. Looking at our strategy, TSI got us out of the trade over here after getting us in on the breakout over here. So catching a 50% movement on COQ. And right now, TSI is just suggesting that we be out of the trade. TSI has not confirmed the bullish trade yet. BBWP is pretty much redlined. All right, so we do want to be a little cautious of that. And RSI is reset nicely here. All right, so we're still in the bullish control zone. Things are good. All right, I would hold positions, but I'd definitely be trimming profits here. And then, of course, up to the measured move target, 79.28. Oh, man. Yeah, guys, my pre-sale was worthless too. It's a time in the market when there didn't seem to be much going on, and should just sat on our hands. Just sat on our hands, I'll tell you what. All right. Let's see here. Okay, Alexander wanted to look at Myro and Metaplex. So let's do so. That's right. Hitting that like button's guaranteed TP1. All right, so here's the Myro chart. I actually still had it open. Okay. As you guys can see, I did trade this. You can see all my buys here. Made about 500% on this trade. And yeah, what do we want to talk about here? Yeah, again, just good strategy here, guys. And this will kind of help us when we're thinking about the other chart that we were looking at. These descending patterns are pretty good for breakouts, right? Falling wedges are really good, and falling channels are really good like this, okay? And basically, once we see a breakout, we can either buy the breakout or we buy the retest, okay? We buy the retest. This is all good. And then basically, you just take a fib from the top of the channel to the bottom of the channel, and your target is going to be in between the 382 and the 618 retracement, okay? So you guys see that on the breakout, okay, price pulled back, and we got very, very close to that on the initial up thrust, right? So this is kind of the result of the breakout of the falling channel. And then we do it again. We kind of go into another descending channel, right? And you could kind of mark that out. We break out here, and I'm sure here is where we hit the profit target on that if we were to draw that out. And then, so that's pattern trading, and that can really help you hit those trades like that, okay? Breakouts of falling wedges and falling channels, is a fantastic start for people. I mean, I think that is a fantastic way to trade. It's a fantastic setup to look for in crypto. Falling wedges, breakouts of falling wedges targeting that 382-618 retracement. It's very good, very good, easy starting technique. And then, of course, remembering the caveat of buying the breakout or buying the pullback. And yeah, Myro, we were looking at this trade. Why did I hold this position? Honestly, because I'm lazy. I buy DeFi tokens and I forget about it. There's not much more to it than that. So yeah, I know Alexander had actually gotten me into this trade, and then he had messaged me somewhere around here, right, when we broke back down, right? And he's like, I'm gonna sell, and I was gonna sell, I just didn't. I just forgot. You know what I mean? I had too many other things going on. That's why, I just buy $500 or $1,000 worth of coin. What's the upside possibility, right? 5 to 50 grand. Okay, what's the downside? I lose $1,000. Okay, well, life happens. I don't have too much to say about Myro right now. Consolidating, after a big rise, a lot of profit taking happening right now in Myro. People in their Telegram and Discord wondering, like, yeah, you can't win the lottery if you don't buy a ticket. So yeah, I don't have too much to say about Myro. Honestly, I just traded it, exited it. Generally, I don't want to look at the chart too much after that, because then I'm like, oh, like, when I should re-enter and like this and that. Breakout above 42. Definitely in a pullback zone buy right here. Of course, we are at the bottom of the consolidation range and we haven't broke the range yet. So just targeting mid-range would be about a 20% trade. Top range would be about 30% trade at this point in time. And what we can do now that we've had a big rally like this, now we just mark out the 618. Again, same thing, honestly, right? When you have a big rally, price is very likely to come into the 382 to 618 retracement, okay? As you guys can see. So looking for pullbacks, this is kind of the zone that you want to be buying in, all right? And ideally, I prefer to do most of my work down here in between the 0.5 to the 618. That's kind of the juicy zone. Okay. Some people prefer to operate between the 618 and the 65, right? Which is a very narrow window down here. Okay. Very narrow window down here. So either approach is fine. It's okay. So, again, usually what we'll see is immediate, like, buying aggressively on the first initial pullback down to the 382 or the 236 can often be quite good for an aftershock pump is what we call those. Basically, you're just targeting back to mid-range. Or, again, for a new all-time high is totally fine too. But obviously riskier there. So taking profits in that fashion is fine. And then basically, like, on the next pullback, you're waiting for the 0.5, 618, buy, again, targeting mid-range. The 382, 236 are good profit targets. And then if there's another dip, the 786, 886 pocket down here would be kind of the next, the last place to buy, which is basically just a full pullback, a full failure of the rally. a full pullback, a full failure of the rally, and retesting previous resistance as support, ideally. So that's what I'd be doing now. Again, either aggressively buying up and targeting mid-range. So a safe trade would be about an 11% movement from here to about 35 cents. And then, of course, you can take 50% profit, move your stop loss to break even, and hold to see if this token actually breaks through. So, yeah, that's my thoughts on Myro. Sorry, guys, a little tired today, I guess. And then Metaplex, right? So, I mean, look, guys, I literally just gave this lesson. What do we got here? We have a beautiful opportunity. Not yet, but setting up on Metaplex. Falling wedge. Falling wedge. All right. I just taught you how to trade them. We're going to be targeting the 382618. And then just waiting for a break of the falling wedge. Excuse me, to give us a 50% trade. And this is nice because what do we have here? Basically, I think we have an 886 pullback. 786. And huge volume that came in there. That is ridiculous. I think I'm going to buy Metaplex now that I'm looking at this. I mean, that is massive volume. That's huge volume. Yeah. And I've got money on Solana, right? Yeah, I got like $4 grand. Yeah, so I am actually going to buy Metaplex here. It's a little early. I think I'm going to have to sit through some drawdown, but that's an easy trade. Just got to adjust my slippage. Actually, you know what? Let's do this. Let's do this since I'm such a fan of it. Let's just DCA in. I want to allocate 1,000 USDC to buy Metaplex PY1M. Double check that that is correct. PY1M, yes, that's correct. I'm just checking if you guys didn't know that, I'm just checking the contract address. It's showing me when I type in MPLX, it is showing me the contract address there. It ends with PY1M. Might be hard for you guys to see that. Sorry. PY1M. And so I just go back to I want to trade Metaplex token. And I just go back to Bird Eye, excuse me, no S, and I just double check that the address over here matches. Okay. So I'm going to be using the DCA feature, and I'm going to buy every 4 hours over, let's see here. I want to allocate 1,000 USDC, and I want to buy every 4 hours for basically 5 days. So that would be 30 orders. Cool. Second. There we go. Creating DCA order. I really like this. I mean, you know, this is just nice, right? It's just nice. It's nice to build a position like this slowly over 5 days. Like I look at the chart and I'm like, oh, this is great, right? But how dumb am I going to feel if I just go all in with one position size here and then price comes down here 43% to the bottom of the channel, all right? So now I've got 5 days to DCA in low or to DCA in on a breakout. It's totally fine, right? And then once that's all DCA'd, I'll set an alert for 30 cents. And when we reach 30 cents, I'll DCA out. Only because Solana is so cheap. I mean, yeah, that's why I'm doing it. Listen, guys, I would do this for every trade if I could. Right? If Ethereum gas fees allowed me to do this, yeah, I would do this on any chain. This is a better way to trade. Slow in, slow out. Slow in, slow out. You know what I'm saying? Yeah, Metaplex is on Solana. Yes. MPLX. Paste the contract address into the chat. And I highly recommend trading on Bird Eye. It's beautiful. Use Bird Eye for your TA, and then use Jupiter DCA for your entries, or you limit order, or whatever you want to do. I'm a big fan of the DCA though. So yeah, Metaplex looks good here. That's huge volume too. That's such big volume. Because they don't want you to make money, Alex. That's why. Exchanges are not interested in you making money. Oh, yeah, B-Flow? Yeah? I make hard look easy. I make dry look greasy. All right. What we got on... Yeah, on Jupiter you can you can DCA and limit order. Yep. And like you could trade when you trade through Bird Eye, like this trading terminal over here is Jupiter. Like your trades go through Jupiter. But if you wanted you can't you can't natively DCA from the Bird Eye interface. You got to go over to Jupiter. Oh, there you go. Yeah, so that Telegram bot's just taking advantage of Jupiter's DCA functionality. Okay. Give me a second. I'm gonna distribute this. Why is my thing being weird? Let's see here. So we'd be going for 2614. I would say, yeah, I mean, at this point, right? Jupiter with a Y, right? No, it's not Jupiter with a Y. Oh. Hmm. All right. Anyways. Peckham, what's up, my dude? So the deeper we went, the deeper the DGen corner. Yeah, man. Yes to crypto. Oh, yeah. So you just come over here to DCA. You want to allocate USDC to buy whatever you want to buy, right? And then for me, I selected I want to buy every 4 hours over 5 days. So that's 30 orders. Because that's 6 orders in a day. There's 6 4-hour chunks in a day. 24 hours. So 24 divided by 4 is 6. And then over 5 days, 6 times 5 is 30. And then you just start DCA. Yeah, man. Yeah, Jupiter is so amazing. I really like it. It's just a better interface. Yeah. It's my favorite DEX. Kimbo. Traders draw lines. They don't do math. Get out of here with your uncursed words. So yes, we'll do Kimbo. We'll do Kimbo. We'll do Kimbo. Let's do Kimbo on Avalanche. Okay, cool. Finally, something new to add to my Avalanche watch list. Kimbo. Here's another like little good kind of mini example of a falling wedge, right? Right here, right? Okay. So you've got the falling wedge. And again, you know, again, this is your preference. You can either, but you got to, I've been asked, what is up with my microphone? I've been asked this like so many times, like, hey, how do I, you know, should I draw from the wicks or should I draw from the candle bodies? And personally, I don't think it matters too much, right? I don't think it matters too much. Okay. You know, because optimal is the enemy of good. So striving for perfection is not the case, and nothing in trading is exact science. So it is what it is. But in my experience, if you are trying to catch wicks, then use the wicks. If you're just trying to catch general zones, use candle bodies, right? But again, I do in my daily usage of trend lines, I don't care, right? I will connect wicks to candle bodies, and it's all good. But if you want to be more precise, I think wicks are better. So in this situation, we'll just measure, right, from the wick here, and obviously maybe it might be a little bit more accurate in this situation to measure from the candle body, because you are supposed to measure from the top of the wedge, okay? And that would have given us this 382-618 zone that we had here and here. So just kind of a beautiful example of how to catch a trade like that. And now we've got a nice run up here, price pulled back to the 618. We've got a nice run up here, price pulled back to the 618. And we've got a nice run up here and price pulled back to the 618. Okay. So that is currently support that we do not want to break, lest this Kimbo rally end. The 618 retracement right here. Okay. So basically the low of today's daily candle. Big long-legged doji, aka Darth Maul candle, very indicative of a lot of people selling and a lot of people buying the dip on the resulting dump of the selling. Okay. 1.6 million in liquidity, $38 million market cap. Look at you, Alex, getting on the meme coins. This is another dog coin. I see a dog here. Kimbo slice. Let's see here. Yeah, I mean, listen, like decent volume coming in. But nothing crazy, you know? On a coin like Kimbo, I would just hold, right? I just hold, no reason to do anything. Take a little bit of profit, right? Make sure you're taking 20% profit, stops in a no loss situation. And I would probably close if we end up closing below today's daily low. Because then the likelihood of a more steeper pullback is much too great. But yeah, I mean, listen, we've just, every time we've rallied, we've pulled back to the 618 here, here, and here. It's already happened. So what's happened every time we've pulled back? Almost immediately back up. So I would hold Kimbo, my friend. I would hold Kimbo until we close back down here below 43.63. You could enter now, right? Obviously, it's very scary to enter on something very up this high. How could we manage risk? I mean, as long you just position size to manage a 20% pullback, right? Because that's where you'd be essentially closing your trade out. The truth is every coin is a meme coin, but only some of them are aware of it. Facts. All right, guys, that's it, guys. That's all I've got for you guys today. I really appreciate your time. I appreciate you guys showing up today. You guys have been absolutely amazing. But hey, I got to go work on some indicators. Thank you guys again. Thank you for all the generous support. Yes, to crypto, thank you much for all your generous contributions today. I really appreciate you guys. You guys are absolutely amazing. If you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section down below, and I will get back to you as quickly as I can. Make sure to join our Discord so you can join the fastest growing community of online traders and investors in, on, within, outside, around, and abound the internet. We will be back tomorrow afternoon for another episode of the live crypto trading room. And oh yeah, shameless self promotions. If you guys are interested in joining the premium trading group, getting access to our trading signals, market updates, technical indicator package, weekly coaching sessions, and much more, check out everything that we do at crackingcryptocurrency.com. Links to copy trade me are down in the description, as well as the links to everything else you could need in life. And I will see you guys tomorrow. Cheers now.
You